My name is Nick B, and let's get into this week's futures overview. Starting with the Forex economic calendar, it's not going to be too much of a news driven week. Monday, we have ISM Services PMI. Tuesday is quiet. Wednesday, 10-year bond auction. Thursday, unemployment claims, and the 30-year bond auction. Nothing for Friday. So it's going to be a quiet week in terms of macros, but we do have quite some earnings that will be up. But other than that, let's jump into it. Let's take a look at futures, starting with the S&P, and let's go over some of the history of what's been unfolding and the environment, the area that we've been kind of hovering in. So, with that said, what is this gap? Oh, it's a rollover. With that said, we are currently below our previous all-time highs of 53.36. As long as ES stays below that on the weekly, my 20-day EMA is at 53.44 now. But ideally, if we stay below the previous all-time highs of 53.36, it's going to expose us down to 5,300 first. Below 5,300, we're looking at 52. Well, that's not fair to assume. I would say 5,200. Below 5,300, 5,200. And if at any point 5,200 decides to give, we are going to have room to come down to, I would say 5,150, only because that's exactly 10% off of the all-time highs of 57.21. But I say it's rather rash to take that on now. I say that this week should be seasonally, technically speaking, a bottom. I'm gonna go ahead and say that this week we are going to bottom out, and I'm ready to eat it if I'm wrong. Downside, of course, if we break below 5,300. Okay, we can start spilling over. We could start looking at a little more pressure towards 5,200. And again, 5,150 is kind of that downside target. But with all that said, the moment we can retake 53.36, 53.40 really on the daily, and as long as we hold above that area, we will have room to have a snapback rally. This happens to be a little too oversold here. Um, and a good way to look at it also is to not confuse pace with direction. When we're looking at this on the weekly, on the daily, on the 4 hour, and let's alternate through those time frames weekly, this looks bullish. Daily, still bullish. 4 hour, still bullish. And then when we get to the 1 hour, mm, still bullish, but we're having a hiccup in the trend here. Okay, so with that said, this kind of just reinforces to me that, well, why did we sell off? Why was it so aggressive? Why did we erase about a few months of gains in about 3 weeks' time? Again, do not confuse pace with direction. The overall market is still bullish. In the macro sense, we are looking very good. I mean, we're not really struggling. We're not taking on any bad catalysts yet, especially with the NFP numbers that we had last week. If anything, that's going to incentivize that rate cut into September. The other side thing I do want to mention is that inflation data, CPI, PPI, retail sales. I don't think we're going to have too much of a reaction off of that anymore um, into next week when those news events come out, because again, most of all of this has been baked in and we know where we're heading. We have that we have that green light where, you know, we're gonna get those rate cuts. That's going to stimulate a weaker dollar, and that's going to also help more liquidity come back into the U.S. markets, and we're off. We're in no different of a position than when we were back in April of this year, back when we had that pullback straight down to the 100-day EMA. You can see here we tried to close below it. Ultimately on ES, we ended up bouncing off of 49.59, and we took off. We never looked back, and that was that pullback. Again, it was a tough area where we were at in there, but regardless, the market is still bullish. With that said, I won't be ignorant to more downside, but I do want to come out here and say that this is my bottom call for the market here seasonally. I am, again, going to accept if I'm wrong, but I don't buy it. I can't wrap my head around why we'd all of a sudden top out here, why the market would peak here. Market doesn't typically peak in July or the summer months. If anything, at best, market peaks around November, December, and sometimes January, February, we may see a peak. But other than that, summertime, seasonally, I don't buy it. Not yet. With that said, again, for more upside and on the big picture for trend, because we're in a place of complacency where still traders, investors may not have a grasp on what the direction may be, considering I do use Dow theory for my analysis. If we break above the second lower high of 56.32, NQ is now below. Wow, okay, okay, so we're flushing now. Well, let me see NQ really quick. Down to 200. Wow. Okay, we'll go over that in a second. But I'm still holding on to the idea that this week we end up higher. I say this week ends green. Again, if ES breaks below 5,300, we're going to be exposed down to the higher lows of 52, 52.50, ultimately coming down towards, I want to say it's 5,200. Now, if and when ES gets below 5,200, we're going to come down to roughly around that 10% correction for ES, and that's going to be around 51.50. If we fail to get off of 51.50, well, then more downside is coming. But again, the question I'm presented with to myself is why here? Why are we topping out here? And we've had a number of things happen, especially last week with the geopolitical tensions where VIX had a nice fat spike towards 30. But again, we never even got above 30 and we ended up pulling back quite nicely into the close. So again, what's this really stemmed from? And at the moment, again, mixed in with seasonality and what we've been going through, this is just, I guess, part of the correction territory. So with that said, as if ES can and will get above 53.36, especially on the daily, we have that room to then come back up towards, I would say, as much as 5400, above 5400. That exposes us up to the 50-day on the week on the daily of 5470, above 5470, 5500 as a round number, and then we're going to be heading towards 5600, our first lower high. But again, if 5300 breaks down, down we go. Down we go again to 5250. 5200 is that baseline, and we'll go from there. No executions into Sunday. I want to say that Monday, Tuesday, we see a little bit of weakness come into the market. And around Wednesday, similar to last week, when around Wednesday, we should see a bit of a push to the upside. Now, if that doesn't come to fruition, okay, we have to identify what exactly is the driving force because as we know, in the macro sense and the overall sense, the market here is still bullish, can't deny it. Maybe it's the perma bull in me, but you can't deny this market. With that said, breaking this down to the 4 hour, right? Okay, more downside, very bloody here. Looks like so. Let's identify the higher lows that are reasonable. Yeah, 5300 would be your first one. Below 5300, we're looking at 5260. Below 5260, 5245, and then again below 5245, 5200. 5200 breaks down, we do have that room to end up heading down towards, I would say, 5150. That's exactly 10% off of the highs. But again, no rush. Can't call it here. We don't have catalysts. It's going to be, might be low volume, but the volatility still is going to show itself into this week. Now, the first 9 days of August typically are usually the weakest. So with that said, I'm not going to be in a rush to execute, but looking at this even on the 4 hour, 1, 2, 3, 4, 5, 6, 7 doji, well, 8, 9 candles in a row here. Let's see what happened here. 1, 2, 3, 4, 5, 6, 7, 8. So this is a first here. Let's see, at some point I do want to say this is going to snap back, not to mention the main thing that I was looking for, especially last week. Oh, we filled it. We had a gap to fill from 55.85 up to, I would say, to 5600, and we tapped up on it. We tapped up on it. Maybe came a tick away from it, but we filled this gap, I'm going to say, on ES. With that said, if and when we are above 53.36, it's going to be the same song and dance. We're probably going to end up heading towards 54.30, but again, that's let's slow it down. 53.36, so 53.40. I would target the first psychological level of 5400. If we can get above 5400, again, that's going to expose us up to 54.30. Get me above 54.30. We can look at 54. Really, you have no resistance unless you're using round numbers above 54, 54.30. You're really looking at 5500. I mean, you have zero resistance until you hit a psychological number. Get above 5500 again. We might run into a little bit of resistance at 55.32, but look how jumbled these moving averages are here. You got the 20, the 50, the 200, and the 100. That's weird. Typically, you have the 200. The 100 is supposed to be crossed below the 200, but the 200 is still below the 100 day. So again, that leaves room for speculating that this may potentially, you know, get get crossed out. We might just reverse this. With that said, there is no trend here yet. Absolutely not. The only trend is, again, if we break below 5,300, fine. That exposes us down to 5,200 on the big picture. And the only way we're going to see these all-time highs again confirmed is get me above the second lower high of 5627. Everything here is going to be based on the round numbers, and rather, can we inch or hold ultimately on the daily? Can we get above April's all-time high of 53.36? As long as we can hold that, we should be able to bounce out of here, and this should be the bottom for July, August. This should be the bottom here. Should. We'll see what we get. That's in terms of ES. Going over to NQ. Now, we broke below 18,250 just now. That's crazy. Came down to 18,213, and for me, my level on NQ was really 235, but 250 gave me room to 235. So seeing that we managed to wick this down below is not too great right now. Let's pull this up on the weekly and let's assess this. So again, similarly, one, two, three, four. This was back in April when we had our pullback. Our all-time highs are at 18,730, 18,728. If the daily candle can show us that we can retake this level and hold above it, great. We have more potential for upside towards 18,866. I remember about 2 weeks ago we have a gap to fill. We're going to take a look at it on the intraday, but that we have a gap to fill towards 19. Oh, it's 19,887 right here. Oh, that's far away. So before we get into that, let's take a look here. If NQ manages to close below really 18,250, and especially the wick here of 18, it's 235, we are exposed to 18,000, possibly 17,900, and especially if 17,900 cannot hold, we are going to make our way down to the weekly 50 of 17,600. That's going to be that first stop. Now, how plausible is that? Again, we just opened up here. It's too early to take on a call here, but again, I do still hold it in my heart that it's possible, and that we will end green this week. I'm still going to hold on to that. And if I'm wrong, I'm wrong. So be it. But again, this is all too sudden. Let's not confuse pace with direction, because I don't see how the market can be invalidated here. The biggest red flag for me is if we end up breaking below 17,100. Then I can wholeheartedly say, okay, guys, it's over. But until then, I just don't buy it. This is a shakeout. This is a scare. Call it fear mongering out in the headlines or calls it for. I just, again, I cannot see. I don't see it. Not because I'm ignorant to it, but it really doesn't make sense in a macro sense. It doesn't make sense logically to me why price action would just say, okay, screw it, we're out of here. Not yet. I need something stronger than just geopolitical tensions that don't last more than 36 hours in the market. It's just a reaction. Now, again, that's not to excuse that if we get more bad news, all of a sudden, maybe we could continue flushing. But I won't hold on to that just yet. I need to see how we do into this week, and I'm going to say we're going to start off weak. We're seeing the weakness now. We're going to start off a little bit weak, and then into Monday, maybe we get a prop up. Most times, Mondays, especially on low volume with no news, ends up going sideways. Tuesday might not be much, and if Wednesday, again, ideally, if into the middle of the week or at any point this week, we can regain the April all time highs of 18,728, well, then we will have confirmation that yes, whatever open, whatever lows we touched up on today's open, that's going to be the bottom. We'll be monitoring it closely. With that said, let's take a look at this on the daily, breaking this down on the daily, and you can see here clearly, right, as long as we're right on it, but if and when we are above 18,235, I'm basing my target to the downside. Well, we have some support here at 18,060, 18,058, but I'm really eyeing the daily 200 day, and that's going to be at 17,940. Now, if and when we break below the 200 day, yeah, okay, it's over. But again, how plausible is that? Until it happens, we can't say for certain, but I'm still gonna hold on to this bullish bias because yes, I am a permable, and yes, I just can't accept that we are going to peak here. It statistically does not happen. Not to mention how fast we erased our gains from April. It took us 3 months to run up to 20,983, and it took us only 3 weeks to erase all of that. Now, the question is, of course, it's timing, but the question always is, it's a matter of when. At what point? And I want to say that we are ready and we are at that point of extreme fear. The VIX cooling off with the dollar being weaker, and again, us having good standing in macros. This should be kind of the last of it, if you will. I did notice that some traders, some investors were kind of looking for a safe haven to sit out of the market storm for now because seasonally we do know that into summer blues, it does get slow, and we don't get the best price action until after September. So we may get a little bit of attention going back into bonds, specifically the 7 to 10 year bond yields and gold. If you remember last week, we talked about gold possibly for more upside and how that can correlate for more downside onto NQ. We'll take a look onto growth. We'll take a look at that right now in a moment. But again, what are we at? 18,259. It's about patience right now. It's all about being patient and sitting tight, getting ready. Because again, I can choose to go against the flow of the market, go against the trend, but the saying always goes, the trend is your friend. And according to my strategy and my philosophies, my approach to the market, that's just not how I do things. I much rather be prudent and stick to my conviction to the very, very end because the captain always goes down with his ship. So I'm ready to go down with the ship saying that this is the bottom. I'm ready to say that what we're seeing into at least the first 9 days of August right now should be the worst of it. Should. Right? I'm not going to ignore, again, I'm not going to ignore the fact that if we do continue breaking down, and especially if we end up below 18,250 or end up below 18,000, okay, something's very, very wrong in the market. But you also have earnings as a catalyst. Given all that pressure that we had last week, especially on AMD, on Microsoft, on Amazon, on Apple, even throughout all that pressure, these guys still came out, with pretty solid reports, especially Apple. Apple, not a, not a flaw in their earnings yet. They actually had growth. So again, with that said, where is this flush coming from? And again, that should be kind of not algo based, but really seems reaction based here. With that said, these are we covered the levels. To reiterate, let me quickly reiterate again. Kept me above the previous all-time highs of 18,728. Great, we're going long. We're targeting 18,940. Get me above 18,940. We're definitely going to be targeting 19,400. Get me above 19,400, we're going to be looking at 19,700. Get me above 19,700, we're going for this gap fill towards 19,800 to 19,950. And again, similar to ES, I know it's a stretch because this is what I use Dow theory. Above 56, 60 on ES would confirm more upside. In this case, above 20,100 on NQ would give me the green light for a definite push towards the all-time highs again. Now, in terms of downside, higher low number one, and you have really higher low number two. Really, this is my threshold. If this ends up breaking, okay, it is bad. It's bad news bears. And again, we have a whole daily candle to unfold. So for all I know at the moment, we could come down to as low as 18,060. We could. But depending on where this daily candle closes, if it closes back up and holds above, especially 18,300, we have on the smaller time frames a gap to fill right now. Get us above 18,390 and we are definitely going to be beginning the climb up to 18,400, really to 18,500 for this gap fill. Now on the smaller time frames, this is the 15-minute. What do I have? 18,580. And what's this? The second lower high is 18,630. If and when we get above 18,630, again, that's going to give us room to come back up towards 18,700, 18,750, which is perfect for getting above the previous all-time highs. Get us above 18,800. Again, that's going to give us room to come up to 18,930. Above 18,930 exposes us up to 1960. Above 1960, you have no resistance until 19,230. Above 19,230, you have a little bit of a hiccup here at 19,300. Above 19,300, you have zero resistance until the psychological level of 19.4. Get us above 19,400, and we're going to continue up to 19,700. Get us above 19,700, and we're off to the all-time, well, not all-time highs, but we're off to the gap fill of this area of 19,887. With that said, let's take a look at GC. Well, since I have the Russell up here, let's go over that really quickly. So with the Russell, the 2021 all-time high is 2460. Let's reiterate this really quick. Lower high, lower high, lower high. We finally got above the first one this year, got above the second lower high, confirmed a trend reversal, which gave us room and strength to come up to the third lower high, and then we took a really nasty spill here, back down to below even the second lower high. So with that said, below 2100, I mean, ideally, I at the minimum need to see the Russell get back above 2140. Get me back above 2167. I wouldn't mind going long at 2170. Put a stop at 2140, and your first target is going to be 2200. 20 above 2200, you're just going to be retracing your steps from this channel. So 2200, I mean, you have all that room to come up to 2290. And again, the only way the Russell is going to be continuing higher is if and when we get above 2320. Get me above 2320 and we're going higher. Anywhere above 2100 is enticing to go long, but again, this downside here, let's not ignore it. We are below 2100, and that does expose us down to 20,035. Now, if 20,035 decides to break down, well, it's no longer going to be a small cap summer, let's just say. Let's just say it's going to end up heading lower down to the 2000s, below 2000. You know, you're going to have room to 1972, below 1972. I mean, you're going to come down to 1915 again. It's same song and dance. It's just we're in a very funny money area. I think we're trying to shake out a lot of traders in here, and the ideal saying in such times, especially when the CNN Fear Greed Index is at extreme fears of a level 25, the saying that applies here would be, when the time comes to buy, you won't want to. Shout out to Walter Deemer for that golden line. So again, with the Russell, I don't even need to break this down to the smaller time frames because again, we just covered. To reiterate, let's talk about it. 2167, you're indefinitely going higher. You're going long towards 2200, above 2200. You're going to bump heads with, let's see, well, you're not going to bump much heads. I mean, if anything, you have 2200, 2206, get above that. And again, there's nothing here that's going to stop price action from coming back up at least to 2280, 2290, maybe even 2300 at the minimum. But here with this downside here, as long as we're below 2140, look at this perfect breakdown, retest, and then we closed here at 2111. We had a gap down here. We broke these lows. And again, we're exposed to downside here. We're exposed to more downside, but this is still early into the week, and I will not change my view just yet. I want to see just how bad this is going to get into at least today, into tomorrow, Tuesday, and then I want to revisit this most definitely into Wednesday because I'm still going to hold the fact that this is going to be a green week. If I'm wrong, so be it, but I'm going to play it prudently as well on the future sides of things as well. I'm not going to go for these big fat continuation trades unless I absolutely see that. And my first kind of green light to where I can get a sense of relief is if and when the VIX more specifically ends up below at least the $20 level. And really quick, let's go over the VIX. Back in April when we bottomed out where we had a top out actually. I mean, excuse me, a bottom out in April. 2138 was the highs that we got to. Last week we closed at 2339. So if the VIX can into Monday end up below 2135, 2138, that's going to give us a little bit of relief into the market and we're going to head up a bit higher, especially with this gap to fill down to 1950. It's going to be very interesting to see how we start the week off. So with that said, again, I'm going to go ahead and say this. I say this is the bottom. I say that, into this week, after this week, whatever lows we have here, we're going to end green. Last but not least, let's take a look at GC gold. We had a very good hit on that last week. Where are we on gold? So we're at 2482, similar, almost very close, slightly below where our all-time highs were of 2488. And as long as really, ideally on gold, as long as it holds above 2450, I'm gonna say, we're gonna have room to come back up to 2500. Get above 2500, we have 2522. Get above 2522, I'm really eyeing 2550. Now, if GC can make its way down to 2432, and if we end up breaking below 2450, really 2430, that might begin to give us a little bit of relief on the growth side of things. We also know that gold is more of a safe haven currency or investment when the market has a bit of a storm. And it's perfect right now, too, because seasonally, August month, the first 9 days, they're not really the strongest in terms of direction, but there has been a lot of volatility, and that's the dangerous part of the market. Not to get caught in the volatility, rather trade the trend. And again, if we can't in the moment decide on direction, whether it is for the day or for the week, well, we're not going to do anything. But what I'm using here for my confirmations is the fact that overall, the weekly, the daily, the 4 hour, those are all still very bullish time frames for me on NQ, on ES. So without without further ado, let's see what this week has in store for us. Um, Let me take a look at also where are we? Where were we in? Is this May? Yes, 18237. 18. Yes, 18237. So if at any point, which we did tag below it technically, that does expose us now down to 18165. And then below 18,165, we can look at 18,060. Below 1860, I mean, really, we're looking at 18,000. And below the psychological number of 18,000, we're going to come down to the all-time highs over here of 17,956. Below 17,956, that's going to expose us down to 17,725. And then ideally below 17,725, my 200-day EMA on the daily is 17,600. That is a stretch, guys. I mean, that is over 15% of a pull. That's a market crash. That's not even a correction. So let's think about it. Why would the market crash? Why would the market crash now? Why here? It just doesn't make sense. At least not even in the macro sense. So with that said, when push comes to shove, I'm going to say that this is the bottom. I don't care. We're looking death right in the face here. And it is uncomfortable, but we'll get through it. We'll get through it. We'll be just fine. As always, let's have a solid trading week ahead. No pressure, no rush, a day at a time. And let's take it easy here. Let's our first goal, at least our first goal should be get us back above the April all-time highs. Once we are back above April all-time highs, we can exhale and we can assume to take on more buy the dip opportunities. With that said, thank you for your time, and I hope you have a wonderful trading week ahead. Cheers.